Hey, what you've been waiting for all week long. Yes, it's the February 10th edition of Wall Street Winners. Since 1995, been crushing the markets. Let's keep it up in 2020. And of course, this crushes it every single week. All right, so we broke to new all-time highs on the S&P. Now, I left the blue lines that I put on last week because we were looking at trying to figure out, well, how far down could this dip go? And I was saying we could get down to 3150. Now, here's the way you analyze these lines. When you have a retracement, like we did a couple of weeks ago, you look and see how deep is the retracement. So a normal retracement would be 50%. That would have been down to about, let's call it 30.85. Now, if it's a good, strong bull market, then you look for about a 1/3 retracement, which would have been the 3150 area. But instead, we didn't even get down to 3200, which shows that this bull market is actually very, very strong. So one of the ways you can tell how strong a bull market is by how deep the dips are. And in this case, they weren't deep at all. Okay, now another thing to look at on this chart. We broke to new all-time highs, just barely. Now, let's take a look. The Dow just barely broke to new highs. I'm going to come back to this chart again. But look at the NASDAQ. It solidly broke the old highs. Okay, so the NASDAQ is where the action is. Now, let me go back over here. So we had gone through several weeks where the selling pressure was higher than the buying pressure. But that reversed this week. But they're still pretty close to even. So we can't get too excited about that factor yet. Seasonality remains at a buy signal. But this is not a good looking chart. The dip that we had broke the previous lows. The rally we had this week did not break the previous highs. So technically, our seasonality indicator, the Russell 2000, is actually in a mini bear market right now. We're making lower highs and lower lows. So this is not that great. But still, I'm going to leave the change signal level at 157. Seasonality should be sideways here. You can see pretty well sideways all the way until June, and then we start to get the bull move working again. We got the movement back into a negative yield curve, and then we kind of pop back up. But this is really bad. We had the 1 year forward signal, which we could say it was in March, but definitely we got the 1 year forward signal in end of May. Because we stayed in a negative yield curve all the way until October. So there's no question about that. So even if we ignore the late March dip, we're really looking at June through September probably as when we would expect to see some type of a financial crisis. Now, it can be as little as 9 months. It could be as long as 18 months. So we don't want to get, stuck on exactly 1 year. But nonetheless, it's still coming up. There's still no question in my mind that it's going to happen. And by the way, there's a couple of ways that we can look at this. Let me go back. The presidential seasonality is bullish, as you saw in the seasonality chart. But the first year of a new presidential year, in other words, after the election, is the worst year. Because what happens is that in the election year, all politicians pump as much money into the economy as they can. And usually the Fed is accommodative for the politicians. Remember that the head of the Fed is appointed by the president. So usually they don't overtly come out and say, I want to support the president. But the reality is that they do. Now, in the first year of a new presidential election year, all that goes away. And so basically what they try to do is they know that all the expansionary, too loose money supply, all that sort of stuff, they know that's bad. So they try to rein it in the first year. So they become fiscally more conservative and the Fed usually tightens. So this could be a 2021 financial crisis. Right now I'm still saying 2020, but we need to keep alert, obviously. Okay, so what? Okay, now asset allocation bounced up a bit, so we got some money coming out of the bond market into the stock market. But the risk decatur is still telling us that people don't want to take risks. So we're seeing utilities do well and consumer staples, and still interest in the bonds, even though they weren't as good this last week. Global shares not doing as well as the U.S., so we'll stay out of those. But you can see the bonds, they sold off, but then they rallied late in the week. So we're still seeing interest in bonds, that's for sure. Key factors suggest that we're going to see the bonds continue to rally. Okay, look for the bonds to continue to rally. In other words, interest rates go down. A dollar, very strong, and generally speaking, a strong dollar is associated with a strong stock market. That's a kind of a generality. It's not the most perfect correlation, but generally speaking, it shows that money is flowing into the United States to buy capital assets in the U.S. And when they go in to buy the stock market or do a foreign direct investment or mergers or whatever, that money has to be converted to U.S. dollars, and that could be why the dollar is strong here. Gold also remains pretty strong. Like I say, I'm bullish. I have a small position in gold, but can't get too aggressive. It's not that that's certainly not much of a bull market if it is a bull market. Our gold key indicators, though, look at that. They took kind of a dive here. So down at the bottom, you can see the green line is going down. The middle and the brown line it's going down, but it's kind of stabilized. But the top one's definitely going down. So, you look at generally bearish key indicators, but the price is holding up pretty well. Once again, I go back to that basic principle of if all the news is bad and it's going sideways, that means there's a lot of hidden strength in there. And that if the news were to ever go neutral, you'd see gold pop. So we need to wait for these indicators to turn at least neutral before we want to get really bullish on gold. West Texas Intermediate. Said we got down here. I said we'll probably stabilize in oil. I think that's the case. We're seeing a lot of talk with the Saudis and the Russians talking about cutting production in all of OPEC. So I think this is going to actually happen. And then Bitcoin, last week I was saying I'm kind of bullish, but I didn't want to get long. So we're continuing to move higher here. Maybe it was a mistake and I should have gotten long, but hey, 2020 hindsight. For now, I'm going to stand aside. But as I say, the situation's turned more bullish here in the last 2 weeks. We got the breakout above the 55-day high 2 weeks ago. Purple predictors moving higher. We're making higher highs and higher lows. We're above our bandwidth indicators. I mean, whatever you want to look at, it's a bull market, don't you know, in Bitcoin. All right, freebies, we love having you here, but fully paid up members are just, let's put it this way, they're just a little bit cooler than the freebies. All right, freebies, I'm sorry, fully paid up members, hang on one second.